Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the financial sector, XLK, Apple, and Facebook. So said, I guess it was about 5-6 days ago that we were looking for a potentially bearish tech sector in Q3. And we're certainly off to a start that is indicating that that may be what we're seeing. So we're seeing money flow out of the tech sector, and it is very clear that it is going into financials now. As the financials are seeing a ton of strength, they're holding up the market, and we've got our confirmation of the bearish reversal head and shoulders pattern. And further downside, we had a bear break of the inside bar today as soon as we broke 54.67. That was the bear signal. We saw another 39 cents of downside after that break occurred. And we're now just looking down at the low of Thursday of 54.33, which we did break by 5 cents. And that was a very important break because now we're looking back at 54.15. And if we break 54.15, the gaps are on tap. So the gaps will be 53.62 and 53.10. So there is an absolute shift in momentum, lower high and lower low. There's no doubt about that at this point. And there's no doubt in my mind that money is leaving this sector and heading to financials and energy and other sectors, which is keeping the market generally afloat. Overall, considering what we would be seeing if that were not happening, if money were leaving the market, it would be a completely different setup on SPY than what we're seeing here, just looking at how the tech sector is behaving. So the tech sector middle Bollinger Band 54.15 has not been tested in the past 7 months. That is an important test to be watching. Bearish TCG cross is about to occur for the first time since back at the election, and that didn't even get really any follow through to the downside. So if we do see this bear cross and then we lose the middle Bollinger Band and do see some further downside, that's going to indicate to me that we're going to be looking down at the low 52s, the last base of consolidation. So the bearish MACD cross has already occurred, middle Bollinger Band support is on tap, and we're seeing a lot of bearish opportunity in these individual names that have been so extended to the upside since the election. Apple still seeing weakness, lower highs and lower lows, rejecting from exponential resistance, losing the 100-day moving average support. We're looking down at 142.28, 142.20, 142.21. Clearly the bulls are building a base of support around the 142.20s, and if we lose those levels, it will be significant, indicating another leg to the downside is coming. Apple on the weekly time frame losing the middle Bollinger Band last week, rejecting from exponential resistance. And if we lose 142.20, I'm looking at 139.48 as the next level of support that we'll have our eye on. Facebook is still the strongest tech sector bull. That being said, we're seeing this weakness now with the bear break, a loss of the 50-day support after holding it 6 times. That's now resistance. And now we're looking down at key support of 146.37, 144.56. Those two levels stand out to me. We still have higher lows and higher highs. We hit the all-time high. We're pulling back from that all-time high. But unless we break 144.56, the bulls remain in control on this chart. Most other tech names have already seen lower highs and lower lows from this point, and Facebook is one that has not. That's why it stands out as a lead bull. So looking at the weekly time frame for Facebook, losing the exponential supports for the first time, depending on how we close over the next 3 trading days, and watching for the bearish MACD cross and the bearish TCG cross. Middle Bollinger Band is going to be a key support. Look at the double low, 144.42, 144.56. Lose those levels, and that will be indicative of a longer-term trend change on this weekly time frame. So all kinds of stuff to be watching here, and tech sector has a lot of action to the downside. People that are very bullish the market long, that are very bullish the tech sector long, this is a buying opportunity. I'm not so sure that that's going to be the case just because the monthly chart is just beginning its first stages of consolidation, and I am looking longer term, and I am considering what we have seen in the past 7 months since the election. So I'm a bit skeptical that now is the right time to get in for a long entry. That being said, we're going to see bounces on the way down. We're going to see, lower highs and lower lows, so we are going to be due for some bounces. And again, if you are looking for an investment, this is when you are starting to pay attention rather than buying on the way up into all this strength. A lot of people have been waiting for pullbacks to be looking for some buying opportunities. We've also got earnings approaching. Q2 earnings will be coming out sometime in the next, I need to look that up, but in the next month or so, maybe the next 6 weeks, we'll be watching for those earnings to come out, and that will have a significant impact into the short-term direction as well, obviously. So I appreciate you watching. We'll continue to check back in, and I'll see you on Wednesday. Have a great 4th of July.